My real sort of red pill moment was with Serum and Solana in 2020 when I knew got to be all in on this. It's a $20 to $30 trillion opportunity projected over the next 10 years. Solana DeFi in the whole is starting to wake up to the value that comes from a decentralized stablecoin, and this value generated by stablecoins should be flowing increasingly back to the ecosystem and the holders of those stablecoins and less to the centralized entities behind them.
GM, welcome back to Solana Floor. Solana DeFi as a whole is clearly at an inflection point with liquidity pouring in, stablecoin adoption hitting record highs, and now finally one of the most experienced teams in all of DeFi stepping in to really push things to the next level. So I'm very excited to be joined by Cian Breathnach to unpack Solana's new capital engine, because Keel is backed by Sky, formerly MakerDAO, literally one of the biggest names in all of DeFi, and with over $2.5 billion set to deploy, Keel's arrival could certainly redefine the size and scale of both DeFi and tokenized asset opportunities on Solana. Cian, welcome to Solana Floor. It's great to have you with us. I want to start with your journey first. How did you first get involved in DeFi? How did that sort of take you towards MakerDAO, Sky, literally one of the biggest names in the industry, then to finding Keel, and now so deep into Solana land?
Yeah, so I'm an actuary by profession. For those who know what that is, I started out my career working in traditional institutions like banks, insurers, reinsurers. I'm always in the space of like designing and building systems for understanding risk and managing capital adequacy at enormous scales, and normally in quite tightly regulated environments. So I've been dabbling in DeFi in my spare time for quite a while, but my real sort of red pill moment was with Serum and Solana in 2020. I guess the first time I encountered a fully on-chain order book with sub-second latency and costs that were negligible. It really blew my mind, and that was the moment where I knew I've got to be all in on this. So I left my TradFi job in 2020, and I've been working in various capacities across Solana ever since then, always kind of in the interaction between risk and capital, in what you might kind of describe as protocol engineering. And then I started contributing to Sky most recently, shortly after USDS was first bridged to Solana late last year. And I've been building out the team of contributors of Solana natives that have been focused on building the Solana primitives for Sky and kind of laying the groundwork in terms of integrations and relationships across Solana that would lay the groundwork for what has now become Keel.
Super exciting. Now, for anyone who's hearing about Keel for the first time, what exactly is it? What sort of problems is it solving within Solana? Can you tie it into the bigger picture for me?
Sure. So Keel is an on-chain capital allocator at scale, and it's focused on providing stablecoin liquidity into Solana DeFi lending, as well as into tokenized real-world assets. So you can think of it as less of a product and more like a liquidity layer, enabling capital to flow efficiently between existing protocols, connecting Solana DeFi's participants with deep liquidity enabled by the Sky ecosystem. Keel is anticipated to quickly become one of Solana's largest on-chain balance sheets over the next few months. I will be the first to run institutional-scale tokenized asset programs for the network, kickstarting institutional engagement. And you can expect to see much deeper and more stable supply of stablecoin lending liquidity into existing DeFi marketplaces as Keel integrates to all of the major venues and ramps up its supply over the coming months. And as well as that, you can expect to see big news on the RWA front with the first native issuances of institutional assets on Solana coming online.
Super exciting. So earlier you mentioned your first sort of run-ins with on-chain order books was in Solana land with Serum. But I want to sort of dig into that a little bit deeper. Why build this on Solana specifically? Why not somewhere like, I don't know, Sui or Aptos that some people say has a higher upside potential? There's different sort of analyses out there. But out of all the chains that you've analyzed, what convinced you that Solana was the right place to build the foundation of Keel?
Yeah, I mean, for me personally, as well as I think I can speak for many of the other contributors on Keel, we've all been in Solana for a long time, and I think there's nowhere else we'd personally prefer to be building. But in terms of how we pitch the opportunity to the wider Sky ecosystem, I think our thesis is clear, and it's pretty well articulated by Solana's Internet Capital Markets thesis. The world's assets are coming on chain. There's an enormous opportunity for the protocols that are able to perform credit creation by collateralizing these assets. This is no joke. It's a $20 to $30 trillion opportunity projected over the next 10 years. And when it comes to Solana, high frequency activities like price discovery, like liquidations, like the credit creation, they should all take place on the same layer where the settlement and store of value takes place. Mm-hmm. So Keel is going after the intersection of both of these opportunities, and the belief that there's a huge proportion of these trillions of dollars of stablecoin credit creation that's going to take place right here on Solana, and that's really what Keel is going after.
Gotcha. So you mentioned capital engine there. Maybe for people that are extremely familiar with the term, it makes absolute sense. But let's sort of break that down a little bit as well. What exactly is a capital engine? How does the $2.5 billion pool of liquidity actually flow into projects, into the ecosystem, and where is it going to make the biggest difference first? Is it going to be maybe DeFi? Is it going to be helping traders? Is it going to be, you mentioned tokenization, RWAs? Who's going to get so the biggest benefits early on from this $2.5 billion flowing into Solana?
Yeah, well, capital engine is a term we've coined, and I guess what we mean by that is a combination of Keel's core protocol, which owns the assets at all times. It's the integrations directly into third-party protocols right across Solana DeFi, and crucially, it's the automation and the dynamic reallocation that enables, it to direct large sums of liquidity throughout the ecosystem to where it's needed. So DeFi marketplaces are incredibly intertwined, and there is a real circularity here. In order to grow new stablecoin lending marketplaces, you need to improve the quality of swap execution. In order to grow demand for borrowing, you need to grow the range and demand for high quality collateral assets against which those borrowers will borrow. In order to grow issuance of new quality collateral assets, you first need to provide that day one liquidity that gets issuers across their own ROI hurdles. And so the Keel capital engine sort of refers to this circular flywheel. The dynamic allocations work to improve one aspect, which in turn helps to improve the next and the next. So you can expect to see the biggest impacts in the markets for stablecoin borrow lending, where the addition of both deeper but also more elastic supply of stablecoins will improve rates for borrowers, both in terms of the cost they're paying as well as the stability. So preventing the types of spikes and looping unwinds that are so common today on Solana. And hopefully it won't take long for us to also see an invigoration of the tokenized real world asset space too, with large pushes here from Keel helping to spur on new tokenization platforms and new interest from institutional players as well.
Yeah. So you mentioned sort of unwinding there and flywheels, and it got me thinking about the events of October 10th, which is a bit of a tangent here, but I'm curious what your sort of personal feelings about this are. Many people pointed to USDE depegging as the root cause, and then later it was discovered that actually that was more of a symptom than the sort of root cause of the issue. With this higher level of stability that Keel is bringing, can we expect to see less risk associated with these sort of malicious attacks like we saw on centralized exchanges? Is it going to improve decentralized finance to the point where hopefully more people take their assets, bring them on chain, and stop sort of leaving them on centralized exchanges? Is that something we can expect to see?
I mean, I think the big observations I would have from last week's events are we continue to see that most of these crises stem from centralized finance and centralized exchanges. And I think one of the positives we can take away from last week is actually just how well DeFi, and in particular Solana DeFi, stood up to the challenge. So, right across all of the leading lending venues on Solana, there wasn't a single dollar of bad debt incurred. So all of the systems operated exactly as we expected. The risk parameters that had been set by these teams were, calibrated correctly. Liquidations took place in an orderly fashion. The network, managed to process tens of thousands of transactions at a time. Gas costs barely spiked above a cent at any stage. And so Solana in particular, although I think DeFi more broadly did very well, Solana really showed that it can handle this and also handle a hell of a lot more from here. So that I think would be the biggest takeaway I would have from last week's events. Yeah.
Clear. And going perhaps a little bit further back in time, you were speaking at Solana Apex, Solana Stable Future events. I think they were in Korea and Singapore. So give me a sense of, first of all, how that went. Congratulations for the big announcements and everything. But I'm curious how it went, and the biggest takeaway from those discussions, what people brought up following those discussions and those presentations, and how does those presentations that you gave really shape what Keel's hoping to achieve going forward?
Yeah, I mean, thank you for the congratulations. I mean, overall, it's been a really, really terrific response, especially from the Solana ecosystem, where I think the value that Keel can bring is becoming increasingly clear for folks. But also within the Sky ecosystem, where we've really been throwing a spotlight on the opportunities here on Solana that may have been overlooked by some for the last number of months or years. I guess looking back at the topic at the various events, one that's particularly clear over this period, I guess, is folks within Solana really starting to question the value leak from Solana to centralized stablecoin issuers like Circle and Tether. I think there's been some posts highlighting something of the order of $500 million a year that's effectively being extracted and leaked out to those centralized treasuries of T-bills and money market funds, simply because of our real reliance on this duopoly of the two stablecoins, USDC and USDT, on Solana today. So I think, Solana DeFi in the whole is starting to wake up to the value that comes from a decentralized stablecoin, and a real sense that this value generated by stablecoins should be flowing increasingly back to the ecosystem and the holders of those stablecoins and less to the centralized entities behind them.
Definitely. So we also covered this recently. I think that one of the figures, unofficial of course, was, as you mentioned, $450 million from stablecoin yield that's leaving the Solana ecosystem every year. And it's worth mentioning here that just this morning, Circle's USDC issuance hit $37 billion, and PayPal's PYUSD hit $1 billion, according to our research team. So evidently, there's a massive and growing appetite for stablecoins on Solana, which typically has lagged behind the Ethereum ecosystem. But another important point here that's worth mentioning is that, as you said, the discussion around a Solana native stablecoin, or a stablecoin that isn't going to allow so much value leakage to take place, has really been kicking off in recent weeks. So you recently coined this term DeFi dollars. It's a little bit TradFi-esque, so people in DeFi might not necessarily understand why we need DeFi dollars. So what is a DeFi dollar? Why do we need it? Does it fit the bill of being a potential solution to this stablecoin value leakage problem that we're discussing at the moment?
Yeah, so I'll start by defining the term DeFi dollar. Folks sometimes refer to it as a debt token or as a collateralized stable, but effectively it's a stable coin like USDS or previously DAI that is backed not by centralized fiat balances, but instead created by over collateralizing high quality on chain assets. And the benefit has been present in the Ethereum ecosystem right since the outset of DAI in 2017. But historically, the lack of this type of stablecoin within the Solana ecosystem has been a detractor for growth and for stability. And so the benefits tend to come through, I guess, in three major ways. Firstly, a complete reliance on the fiat-backed stablecoins like USDC and USDT creates a real dependency on a small number or a concentration of whale lenders. And these whale lenders can't rapidly scale up and scale down the supply of USDC or USDT because it is ultimately dependent on the ability to bring assets in from off-chain or from other chains and to wind down those positions where they have this kind of inherent cost of capital. So that's distinct from a debt token like USDS, which effectively can be increased and decreased in supply almost immediately in response to shifting demands, which provides a lot more rate stability. Secondly, I guess it plays out in the growth of on-chain TVL and in terms of keeping assets on-chain and not sitting out in centralized treasuries. So Sky and its on-chain treasury has historically been a driving force for new issuances of assets, and it's been a pioneer in the space of the first tokenized real-world assets. Unlike these centralized issuers holding those off-chain T-bills, USDS is backed by billions of dollars of on-chain protocol-owned assets, which are contributing to ecosystem metrics and growth. And then lastly, I suppose the big point, as you mentioned, yield generated on these assets stays on chain and it's cycled back through the ecosystem, usually in the form of yield on a corresponding yield-bearing stablecoin, which in the case of Sky is SUSDS, and that's an asset that's accruing 4.75% APY today to its holders.
Excellent. So SUSDS, let's go a little deeper there. How does it fit into this overall vision of a decentralized stablecoin layer on Solana? And when we talk about things like SUSDS and we're hopefully optimizing around reducing some of the value leakage, what is the core driver of SUSDS? What is it itself optimizing for? What's the sort of end goal for SUSDS? Are we hoping to replace altogether the immense reliance that we have on Circle's USDC and Tether's USDT, or is it maybe more of a sort of a gradual increase in adoption?
Yeah, I mean, look, stablecoins serve different purposes, and I think this is one of the important things to talk through when having a meaningful conversation about it. It's not to say that USDC and USDT won't potentially always play a very important role as fiat-backed stablecoins. They facilitate payments much better than other stablecoins. They facilitate on and off ramping much better, but that's not to say they are sort of complete in their ability to serve all use cases. I guess USDS, as we spoke about, its primary role is in this debt token or in a DeFi dollar, in providing high quality, elastic supply of stablecoin lending liquidity. And then on the flip side of that, we've got SUSDS, which is its yield bearing sibling. And SUSDS is for years been providing some of the highest quality on-chain DeFi yield. It is not competing on double-digit APYs. It is very much a stable, robust, sustainable source of yield. Time and time again, you see it is the stablecoin that receives inflows when you've got market stress events, right? During last week's events of October 10th, SUSDS sees enormous inflows from smart money institutions parking their capital in a safe, reliable, yielding source of income. And so SUSDS is not on Solana today, but the team behind Keel are the same contributors that have been working to bring it to the Solana ecosystem very, very soon, and we'll have more specific dates and news to share on that soon. But that sort of completes the circle in terms of keeping some of that value within the Solana ecosystem, where Keel will be paying of the order of 5% APY to Sky in order to have access to this liquidity and bring it to Solana. 4.75% of that is being returned right back into the Solana ecosystem in the form of SUSDS, which will be here very, very soon.
Excellent. So if we were to zoom out a bit and look ahead into 2026, it gets a bit blurry. I think the further out you look into the future in DeFi, but what does success look like for Keel? What does success look like for Solana's broader DeFi ecosystem? Once SUSDS is around and USDS is maybe more broadly adopted, maybe once we have less value leakage from stablecoins, what are some of the success metrics that you're tracking at Keel? And when are you going to know that you've achieved something for the broader Solana ecosystem?
Yeah, good question. I mean, look, success for Keel is success for Solana, and I think for DeFi more broadly. Keel's infrastructure is being deployed as we speak. The first dollars will be flowing into Solana DeFi later this year and through 2026. We'll see the scale of those allocations increasing, as well as the number of new integrations across Solana DeFi protocols being added one by one. We'll see Keel kicking off the first wave of some very meaningful placements into new high-quality institutional assets and demanding real native issuance for these assets on Solana for the first time. We'll hopefully start to see an improvement in the diversity of stablecoins as Solana, really starts to experience the benefits of the DeFi dollar that we spoke about for the first time. And I hope that we'll see a transition to millions or even billions of dollars of yield being returned and cycled throughout the ecosystem. I think really we are at a major catalyzing point for on-chain capital markets, and I think 2026 really is going to be a very big year for Keel and for Solana more broadly.
Yeah, I think people are super excited about the idea of plugging some of these value leak holes. So undoubtedly, with the growing appetite for stablecoins and the sort of growing trend of tokenized RWAs as well, this I have a feeling is going to be very beneficial to the overall ecosystem participants. So if you had to sort of summarize what it is that Keel's hoping to achieve in the next few years on Solana, how would you boil it down?
Yeah, I think we're focused on a couple of areas, but the two major areas I'd say are we really, really want to see an improvement in the quality and the scale of stablecoin liquidity, particularly in lending markets. And we want to really, really drive high quality issuance of tokenized assets and see sort of a 10x from where we stand today in terms of the scale and variety of those assets on Solana today. So they, to me, would be the two big determinants of success for Keel over the next couple of months and years.
Excellent. We want to go follow along with the all these developments, all these updates, but there's so many different places to go to. Solana Floor obviously is a good source of news, but people want to go straight to the source. Where do they keep up to date with what's happening with some of these stablecoins, with SUSDS, with USDS more specifically for now, and yourself as well? Where can people go to follow along?
Sure, you can follow Keel at Keel_Fi on X, or you can follow me on Croc_Doc on X. And the website is Keel.fi. And if you're interested in learning more about the Sky ecosystem, you can follow there on X at Sky Ecosystem.
Excellent. Cian Breathnach, thank you for joining us on Solana Floor. Really appreciate it. Thank you for making time, and we will be keeping in touch.
Thank you so much.